Hi, I'm Scott from MoneyNerd, and you might be wondering how you can improve your credit score. Maybe you've got a really poor credit score and you want to build it up so you can get a loan or a credit card or a mortgage, or maybe your credit score is already good and you want to see how you can boost it even further. Well, in this video, we're going to look at 5 ways you can boost your credit score, so let's get into it. Before we do, please hit the subscribe button. I do lots of videos about debt and personal finance. Okay, so when we're talking about credit scores, there's 3 different credit scores to think about. You've got Experian, TransUnion, and Equifax. And confusingly, all of these have different scores. In this video, we're going to talk about Experian specifically, but the techniques largely apply to all of the different credit scores or the credit reference agencies that hold those scores. It's just an FYI, they all have different scores. So Experian has a top score of 999, Equifax has a top score of 700, and TransUnion has a top score of 710. It's all quite confusing, but just know that the principles that we go through in this video will boost all of your credit scores across Experian, Equifax, and TransUnion. Okay, so the 5 steps, and I've got a bonus for you at the end. So first step is no more credit. So every time you make an application for some credit, whether that be a loan or a credit card or mortgage, then it has an impact on your credit score. So we need to be specific here. So the industry now has moved towards eligibility checks. So you can safely check your eligibility for loans and credit cards and mortgages, but you can't do a full application. If you do a full application, that will come on your credit score and it will have a negative impact. So just be really wary there. The loans and credit card companies, they usually put something by the button that says, this will not impact your credit score. So look out for that. If that doesn't exist, then just be aware that you're more than likely going to get what they call a hard check on your credit report. And that credit report will show that you've searched for credit. And what that tells the credit reference agencies is that you're looking for credit. And if you do too many of them, it starts to look like you're desperate. So in an ideal situation, you would hold off on doing that hard check, that full application for credit until 6 months, and then your credit report will recover. So point number 2 is 1 card for 5 years. And this whole principle is about holding your credit card and not closing down your credit card. And the reason being is credit reference agencies and the creditors who use the credit reference agencies like to see consistency in your behavior. So if you imagine one person, they open 5 different bank accounts, they close down 4 of them, they open 5 different credit cards, and then they use them, and then they close them all down, compared to someone who's kept the same bank account for 20 years and uses 1 credit card for 5 years or more. Which person would you trust if you had to lend them money? You would trust the person that's consistent, right? So this trick here, keeping your credit card open for 5 years, it will add around 20 points to your Experian credit score, which is great. But so this is something to keep in mind. If you've got multiple credit cards and you're wondering should you close them down, it will really depend on your spending habits. But if you can be trustworthy and you can trust yourself not to spend on those credit cards, what I'd advise is that you keep them open. But if you wanted to close all of them but 1 credit card, what I'd suggest is that you close the ones with the highest interest rate and keep the one open with the lowest interest rate. If you feel like you can't trust yourself around credit cards, then I would just close it down. Don't worry about the extra 20 points on your credit score. Having a good financial health is more important than those extra 20 points. So number 3 is a new product. So there's plenty of credit builder products out there on the market. There's credit builder credit cards where they'll give you a low balance, and the whole idea is that you make those minimum repayments or full repayments, and you're able to demonstrate that you can hold credit and be responsible with credit. Another product for you to consider is Lockbox. Lockbox is a relatively new product to the market and works quite in an innovative way. So what it allows you to do, if you've got money left over at the end of the month, what it allows you to do is to regular monthly payments into sort of like a saving account. But the difference is that Lockbox will report this to the credit reference agencies as a loan repayment. So the credit reference agencies will think that you've taken out a 1-year loan and you've made 12 monthly repayments to that loan. That's how it will look to the credit reference agencies. So that's something that I encourage you to check out. There's no minimum requirements and you will definitely be accepted. It sounds too good to be true, but it only works if you've got monthly surplus of income to pay towards this, and you can do it for 12 months. The fourth point is electoral register, or the electoral roll. So this is registering for your right to vote, and it's a good indicator to the credit reference agencies because it indicates that you've got an intention to stay at that address, or at least gives you another sort of anchoring to that address, and it makes you seem more trustworthy. In addition, I'm sure they've got some data that shows that people who registered to vote are less likely to go into debt because they are more responsible. So that's something that you should do. It will add about 50 points to your credit score through Experian. So absolutely go ahead and do that and it'll give you a boost. The fifth one is monthly insurance. So think about the insurance repayments that you pay. It might be house insurance, it might be life insurance, it might be home insurance. So something to consider doing here, which will boost your credit score by another 20 points, is to pay on a monthly basis rather than a annual or full amount basis. And the reason to do this, and the reason why the credit reference agencies will see this as a positive, is it shows that you're able to make regular monthly repayments, and you're trustworthy to do that. One thing to consider is that very often insurance companies will give a discount for paying the full year, and if you're paying monthly, the interest rates can actually be, or the effective interest rates can actually be quite big, and you'll end up paying quite a lot more by paying monthly rather than annually. I've seen reports of up to 26%. So that's equivalent to taking out a credit card at 26%. So just be mindful of that. If they are charging you extra to pay monthly, then it might not be worth it for that extra 20 points on your credit score. And we're on to the bonus. The bonus you're not going to like, and it is to wait. Over time, the defaults on your credit report, as they get older and older, they have less weight. They're less important when it comes to your credit score. And certainly after 6 years, when, say, a default drops off your credit report, then your credit score will significantly jump. So unfortunately, a lot of the benefit of your credit report just takes patience. If you'd like to check out how to find your credit score on Experian, TransUnion and Equifax for free, I've got a video which I'll link in the description below. If you'd like to check out Experian credit score, which we've discussed today, I'll link below as well. And also I'll link Lockbox, that product that we talked about earlier. Thanks for watching. If you've enjoyed this video, please subscribe and hit the like button, and I'll see you in the next one.